What's going on, guys? It's Expo Jesse. Today we're going to be doing my weekly recap, well, a month-to-date recap, rather, and a weekly watch list is what I meant to say. So we're going to go ahead and start with ES right off the rip, right? So here's our week. September 19th to the 26th was our week. Coming into the week, we were looking at this blue line here, which was if you went under this low, you were seeking to go lower lows. So we ended up closing this low with a back-to-back 3 bars on Monday and Tuesday. Now, historically speaking, I don't know about every single month, but most months that I've looked at, we're averaging about one, maybe two 3 bars in that month. So we look at July, right? Here's one 3 bar. We look at June. Actually, June had one 3 bar. Sorry, July had no 3 bars. August had one. It was really at the end of the month. In August, end of August to end of September, rather, we had 1, 2, 3, 4, 5, 6 3 bars. 6 3 bars in 1 month. We're lucky to get two in 1 month, right? Here's February. February or start to end rather. One, right? March 1, 2. April 1, 2, 3. Okay, we've had 6 in September. Very, very well in the last month. Very, very volatile month. And I was talking with somebody, and he was talking about how bear markets are really hard to trade, as we all know, right? Bull markets are super easy. That's why a lot of people made a lot of money in 2020 and 21, because you could just slap a call on any stock, any blue chip, and it'd go 100% if you left it there long enough. Um, a lot of those people aren't here today, right? I know a lot of stories of people who made hundreds, if not hundreds of thousands of dollars on GME and, the BlackBerry and Nokia, but, that's something that's not going to be sustainable for the market long term. So you got to figure out how to trade them and trade them correctly, right? So a bear market's really hard to trade. And you might think why? I mean, everybody knows it's hard to trade, but the reason is because everybody's just waiting for the bear market to end, right? So there's this inner bull in all of us. I mean, everybody who trades wants the market to go up because everybody hopefully has a long-term portfolio. And if the market goes up, then your long-term portfolio gains money, and everybody likes gaining money, right? So a bull market, it's going up, everybody's just adding into it, going up and adding on the pullback, easy peasy lemon squeezy, right? But a bear market, everybody's just waiting for that time where it's going to flow and stop and then reverse, right? Everybody's trying to catch the bottom, but where is the bottom? Well, ES 3650. If we go past 3650, if we're looking at strat, which is what I primarily play, we're looking at this zone. I'm actually not going to do a line. I'm going to do an order block in this area here. Let me refine it before we move on. Oh, look at that. That was pretty darn good. That was actually almost picture perfect. So that order block right there, which is what triggered everything going down, it rejected it here, it went up, consolidated, and pushed up. Okay, so that order block is what I am staring at. Okay, so if we go under this order block at 3,500, shoot, we're looking for COVID lows, right? So we're looking for these stair steps here, bottom of the wicks, maybe some imbalances all the way down here, right? To keep my chart not looking disgusting, I'm going to delete those. But those are going to be your targets, right? You're going to look at every bottom of the wick, and that's going to be a target. And you can bet anything you want that it's going to reject off of those lows, just because it already has, historically speaking, right? So we have an imbalance, which I will chart an imbalance here, because unfortunately I kind of feel like we're going to be down here. And we'll cover it later when we go into what kind of economic news we're looking at. Thankfully, we don't have any imbalances down here. We covered that in the October COVID lows, and the market looks pretty somewhat similar. We had a flush at the beginning of the year. We had a little dead cut bounce here, flush. Now we're trying to get in back here, right in this area. So with that said, let me go ahead and extend this area and mark this as an imbalance. And that'll be a level to watch. Okay, so um, we're really looking at this level here. I'll mark the 2, actually 3 here. So if I zoom in, we already covered here. Okay, this is the prior week's low, right there at the top. We'll mark it yellow or orange rather. My indicator here, which is hashtag Strat Assistant, already does that for me. So I'll go ahead and delete that, but just showing that I can see that this is the weekly low. If I'm looking at prior week lows, you know, we're definitely not going to have one or both of these bottom ones are going to be taken out at the same time. But these are going to be levels that I want to look for, okay? And then I'll mark over here, mark an imbalance. There's a slight imbalance up here. And this is just, I'm just going to show you what I do every single week. Okay, so we have a little bit of an imbalance right here. Mark that as an imbalance. So far, we have an imbalance all the way up to this level. So I'm going to keep my orange there because if we do have a little bit of a bounce, I'm going to look for getting in short up here. But yeah, so honestly, I hate to say it, but I think we're going lower. The chart looks disgusting. Like I said, here's the COVID look, right? We went down, dead cat bounce went down, tried to catch it up. If I go to the weekly chart, we're looking pretty gross as well. You know, it's really exciting for those of us that are cash and have long-term investments, you know, long-term being retirement, and you can sit on those for 10, 20, 30, 40 years. It's not looking good for those who need to withdraw out of their retirement tomorrow. So with that said, I'm looking shorter on ES. Now, I would not be surprised if we did something retraced for some seller interaction, right? We need to get some more seller volume. We're going to come up to this golden zone. So let me mark out that golden zone. Okay. So if I'm looking, you know, if we start to look bullish, I'm not playing bullish yet. I'm not playing bullish until we're over 41.79, really, on the daily chart. You know, you could play bullish intraday, but if you're swinging, you know I have some AMD and one other spread. I'm blanking on it, but I have an AMD spread and Disney, and it's just, you know, it's the end of October. We'll see if we get a little bit of a push up, and if we do, it's kind of hedging against any puts that I have or any shorts that I'll have. But as far as day-to-day day trading goes, I'm looking at going shorter, right? So overnight session so far, nothing super interesting. We did have a little bit of a push up in aftermarket. But then today actually it's today. Nope, it's not. So we had a little bit of a push up right in aftermarket, like I said. Then we've pushed down and we're kind of just staying stagnant. So we'll see what happens tomorrow morning. And yeah, from there, you know, we can look at a couple tickers. We'll look at Tesla. I played Tesla on Friday. Tesla's one of those that I cannot wait to add to my long-term portfolio, but I'm going to wait until about 260, maybe even the 250 area. 269 is really where I'll start adding into it, right about here, 269.50, somewhere in that area. I mean, as you can see, we've broken all those from the prior week. Tesla was looking really strong going into Wednesday. Wednesday, Thursday, Friday just absolutely killed Tesla. Long term, still love the company. Obviously, earnings coming up mid-October. But we'll take a look at a couple more tickers here. AMD is going to look pretty darn similar. AMD is one of those I added at $69.69 because I am a savage. And I really didn't think it was going to go much lower, but here we are at $68. You know, the next ad's going to be at $60, but I'm not adding there. I'm going to keep my limit price because I'm a savage. And we're just going to, you know, vibe with, see what happens. AMD is not going to go under $60 and stay there forever, right? That's a really good company. They make a lot of money. Lots of green on these E's means a lot of good things for a long-term investor. So just adding AMD at a good value to whatever whatever I think is a good value, and go from there. Apple, as we know, kind of leads the market for everybody. Looks a lot like ES, right? If we break under this 148, we're going lower. Okay, we're going 143, 142, all the way down. Just depends how far ES goes, but 130. Apple's one of those that I am also looking to add to my long-term portfolio. And you know, this fair value at 137, 138 would be a really good area as well. And we'll just go randomly, blah, blah, blah. Oxy. Oxy is one of those that Warren Buffett threw a lot of cash in, so I like that. I like Oxy for long-term investment. Obviously, when Ukraine and all that stuff happened earlier this year, a lot of these oil stocks are going to be gaining a lot of intrinsic value. Okay, so it's going to be built into the stock, and because of that, you know, then obviously Warren Buffett buying in, going up to 75. Oxy's a good stock that I like to play. Sometimes it hedges against the market, so if the market's going down, Oxy goes up, but sometimes it just follows. It's really just something that I like to day trade, and we'll be looking to add to my long-term portfolio. Everything on this list, this is my day trading list, but most things on this list I would add into my long-term portfolio at any moment. A lot of SPY, a lot of Qs, a lot of VOO, all that type of stuff. But let's move on to the economic calendar. We're going up to 11 minutes. Not sure what that is. Oh, that was me trying to type in my rhythmic for my futures. So Monday, some person speaks, but really what we care about is Powell. That man needs to tell us good things or bad things, and we'll know where to go. So good thing is Powell doesn't talk in the afternoon. Afternoons talking is just for the birds. It means that the morning all the way up until that 2 p.m. is trash. But Tuesday, he talks at 7:30. We've got consumer confidence, 10 o'clock. Okay. Then we have him talking again at 10:15. Dude never goes on vacation. We have core PCE on Friday. Week after, we've got NFP, and then all the stuff that comes with NFP. Those are going to be at 8:30. So again, pretty good trading week for us that week there. Week after is going to be core PPI or CPI, PPI, and then FOMC meeting minutes. So really until October 12th, should see some pretty good trading days. We've had a lot of days in the past week or two where there's a lot of volume, no volume until those numbers come out. And those usually come out in the afternoon, so there's been pretty trash trading days. But we've got a couple week span here where you might be able to pull in some good trading days. And after that, looks pretty clear for October. So really only one trading day in October is going to be bad. And then I think federal funds rate comes back middle of... I thought it came back in the middle of November, but we'll get to that another time. So really we're looking good for a good couple weeks span here of trading. And that's good. I like that a lot. So we'll do a little bit of a monthly checkup here, then end the video. So we've got September options and futures here. Futures, we're going to 90% win rate, 27 wins, 3 losses, average losers 100%, average winners 160.62. If you don't remember, futures are calculated differently than options because they're a different market. So they're all based on risk. If I risk whatever play I risk, I'm willing to lose 100% of that risk, right? So if I say it's a 5-point stop loss, in this example here on the right side of your screen, if I have a 5-point stop loss and it goes in 5 points of profit, I've gained $250. If it goes 5 points against me, and this is using ES and as an example, if it goes 5 points against me, I lose 250. So it's plus or minus 100%. So my winners are 1.6 times my losers, which is really good. Options has struggled this month, I'm not gonna lie. We have a 57% average winner, 65.84 average loser. Now this meta put, I will say, unfortunately went from 0.63 to the very next day, went to its full 2.5 value. So that kind of sucked. Other than that, most of these have been 0 DTEs or close, and like this QQQ was a 0 DTE. Meta was a FOMC play as well. So, you know, they're a little riskier, so I let them go a little longer, but Definitely something to improve on. Average winner being about 1 times my average loser would be nice, especially with 85% win rate. I could lessen my limit and get better or get 20% losers, but a lot of times I see that my 20% losers end up going in profit. So I like to bag hold a little bit. Not for everyone. This is just my trading. What I combined. We're looking at 70 total plays for the month, so pretty good actually. About 4 or 5 plays a day. Win rate at 91.43, so a little higher than normal. 4,300% profit total. 73.89% average winner, 65.84 average loser, and combined options and futures. So really good month. Overall, total percent win rates getting up there. A little over, over 1,100 trades now. And I think I got to add in this month still. Double check. Yep, still got to add in last week's. So we'll go up a little bit. 84%. Kind of set a trend that's pretty much where I should be, 80 to 85. And then trying to get those average wins up on the options. Futures are looking really good this month. So try to keep that up. Yeah, hope you guys enjoyed. That's my weekly watch list. And have a good week. Stay tuned in the market. Manage your risk appropriately. And yeah, have a good week, everybody.